we're going to be doing a video talking about ranges, the intricacy of ranges, the way I trade ranges. And this is going to be a very dense and very dense. So have something to take notes on, because if you don't take any notes, it's going to be pointless for watching the video, and you're just going to be wasting your time. So that's the way I trade the market, is through ranges, because as we know, let me go to a different pair. As we know, the market moves in trend and moves in ranges, right? So we'll trend, do a range, trend, range, trend, range, trend, range. It just shifts between both of those. The market's doing one of the two things on all time frames. It's either trending or it's ranging, building up fuel to expand again, or reverse, or retrace. So, because the way ICT normally teaches is buy side and sell side liquidity, but it's hard to know if you're trading using the knowledge that he's given on liquidity. You don't know which high is real liquidity, right? Because you could just drop down to this time frame, and you can see here that we have this liquidity pool, and we have this liquidity pool, and we have this liquidity pool. How do you know when we come down which one we're going to soup and expand off of, right? Because there's so many liquidity levels on all time frames. There's always buy side, there's always sell side, there's so many, right? And the way to filter out which highs and lows you should expect reactions from and turtle soups from is through ranges, right? So I can go on a example that let me find a example that shows the way I use CRT and the way I use ranges, right? So we have this 3-month candle right here, right? And if you watch the past two videos, you'd understand why I was continuously saying look at the range I'm trading and pay attention to what is there, because it's going to tie into this video and it'll make sense why I took that trade. So we got 3-month candle, okay. Oh, that's the wrong candle. Never mind. Wait, no, it's not. Is that the correct candle? One sec. Maybe it was a 6-month candle. I forget which trade I took, if I'm being honest. Alright, I'll look at it on a different fucking... We'll go on NASDAQ. We can go to the current price action. Right, so let's go on the 2-month. And as you can see, we have this one singular candle right here. High and the low. And this is a clear inside range CRT. Okay, Romeo teaches this. But why am I choosing this exact candle as a CRT? Go to the daily. Okay. What is the key components of the high and the low? Well, this low is one that breaks the high, okay? And this is also just a very prominent range high. It makes sense, and it's a clean draw on liquidity, all right? And what's happening at the 50% level? We have price respecting it, hitting it, turtle soup at the 50% to take us down to the range low, okay? So how to verify and validate your range, and this is something I learned from Romeo, something I learned from V on X, Vittorio Rossi or Rossi. Go learn from him. Very, very, very skilled range trader, right? So how to verify a range is, first I look at the high and the low. Is it prominent? Does it stick out to my eye? Can I notice it? Can I see it? Does it stick out to me on the chart? Yes, this sticks out. Very, very prominent range low. Very, very prominent range high. This is the low that breaks the high. And if you study the market, the lows that break highs are clean turtle soup candidates, right? So this low right here breaks this high, okay? This is the low that broke the high. And what happens at that low? Turtle soup, right? So same for high that breaks low. I probably won't find an example in the daily because we've just been ranging this whole time, right? But we can go back to this range. You understand what I'm saying about the low that breaks the high or the high that breaks the low, okay? Because there's a logic behind it. It's not just a pattern. There's an actual logic, right? So we can go into that logic real quick. And I hope you guys really do have a pen and paper, because I'm never going to you guys will always have this video, but it's better to take the notes right now to understand and look through your charts afterwards. Because if you write down the notes and say you learned it, but you don't go back and look through it, it's pointless and you're wasting your time. So why is this low a clean soup candidate to expand price higher? Well, we have a low that breaks a high right here. This low is responsible for displacing through this high, all right? And through the logic of dumb money, right, and very new traders, they're taught to buy highs and sell lows. So when price dumps down and hits this low, they're told to sell. When price comes up above this high, they're told to buy. And here, that would play out. It would play out for a little while. But because they don't understand turtle soup, they don't understand how the market actually trades, they're going to get fucked over and over and over and over and over again, right? So why is this a good low for a soup candidate? Well, people buying above this high have their stops here, and have their stops here, because in their eyes, this is now protected, right? We broke above this high, prices are going to go back here, we're going to the moon, right? Fair value gap, market structure shift, ICT pattern trading. This is a perfect entry, right? But no, it has no narrative, it has no context, nothing to it, okay? You're pattern trading, buying a high and selling a low. So the reason this is a good low is because everybody buying here, they get stopped out. This is their stops. And they're also being told when price breaks this low, they're selling. So now we have buyers stopped out of their positions. We have sellers trapped in their positions. So this is the exact area in price. Okay, that's not going to work. Whatever. Exact area in price that you want to buy at. That smart money is looking to, get into the market because it's at a discount price. Everybody is out of the market. They want to make the move after as many parties has been fucked over, right? They don't want anybody catching the move with them because they're greedy as fuck, right? But they own the market, so they can do whatever the hell they want. But they are looking to take everybody out of their positions before the real move, right? They want the least amount of people to follow in their footsteps, right? So, and why is this a good trade as well? Because you soup this, everybody's out of the market. We're coming into a discount of the range, okay? Into a discount price. So it's probably an SMT. I'm not going to go through this trade or whatever, but for me, this isn't a range, right? Just the way I like to trade ranges. Now people can trade them differently. This is just the most consistent way that I have traded ranges. But the reason why I wouldn't take this long. Okay? At least from down here. But yeah, you understand that lows and highs are key. They will run the market, right? So you can trade with literally just lows and highs, and obviously the time, but that's a whole nother discussion that I'm not going to get into for a while, because that's the most dense video that'll ever go through and I'll ever go over, because I don't even know time fully. It would take a long time to understand that, but I understand time enough to be able to teach a lesson on it. So yeah, so that's one thing about the highs and lows, and another thing about ranges is the 50%, right? So we mark the 50% of this range. What is happening at the 50% of the range? Okay, let's get rid of this real quick. We have price hitting the 50%, bouncing off of it. Price hitting the 50%, bouncing off of it. Hitting the 50%, bouncing off of it. And every range that you want to see is going to have these two or three components actually. It's going to have the key high or the prominent high and the prominent low. You want to see a low that breaks a high or a high that breaks a low. It's just a better overall range. It's not needed though. It just gives more confidence and more confluence that this is the low that we're going to soup. Second, you want to see price respecting and hitting the 50%. Doesn't have to do it 1,000 times. 1 or 2 times is enough because it shows that the market makers are interested in this range and they're showing it beforehand. But if you don't understand this concept of ranges, you'll never know. And lastly, you want to see a turtle soup near the 50% to take us down to the range low, or turtle soup at the 50% to take us up to the range high. Okay, now this is a trade that is very, very difficult to catch. Like if you are set once this high is souped that you are going to take it down to the low, that is a hard trade to catch, and that takes a lot of experience. And so it's not needed, right? It's not needed to do that. You wait for the more obvious trade, which yields a much bigger return than the harder trade to catch. Okay, so those are the 3 key components. I'll write them down real quick over here so you can take notes on it. Okay, preferably a high that breaks a low, or a low that breaks a high. Okay, 2. Damn, what the oh my gosh. Want to see 50% of the range being tapped and respected multiple times. 3, a turtle soup to the range low, or turtle soup up to the range high. So you guys can write this down. Just pause the video and write this down if you haven't already. These are the 3 key components I look for when trading a range. Now, how do you know which low and high to choose, right? That's another big question. People ask, well, how do you know which one's the right range? Okay, how do you know that this is the range high and not this candle is the range high? How do you know this is the range low and not this is the range low? Because if you thought this was the range low, guess what would happen? You never would have gotten your trade. Price would have edged, and right, that's when you use CRT, because candles are ranges. Alright, hope you guys written that down. I'm getting rid of it. Candles are ranges. Every candle is either broken or turtle souped. Now there's obviously the other instances where there's inside bar candles. And what does that do? That creates volatility. Okay? Small candles lead to big candles. We have multiple weeks, months actually, of accumulation and tiny candles building up interest on the buy side, interest on the sell side, interest on the sell side, right? And after we take the range low, you have 1, maybe 2 opportunities to get in. And if you miss that, you miss a massive move, right? But it takes time to build up this kind of move. But if you aren't ready and you don't understand ranges and you aren't ready for a move like this, you're going to miss out on a lot of profits. Okay? But there's a reason why this range was correct. And we also had a key level to back it, which was the 2-month fair value gap. Now, I think the next video is going to be over key levels, which is going to be a video that I personally have never seen anybody teach the way I use key levels. It's the most, in my opinion, the most efficient way and the most logical way to use them, depending on the range you're trading. But I'm not going to get into it right now. As you can see, we have a high time frame key level backing up our trade idea. Okay. So that's those are a couple things on ranges. Another thing with ranges, we have rules with trading ranges. And I credit all of this to Romeo. He's the one who taught me all of this. I'm just teaching it because I also want to teach other things, but I want to include this so you guys don't feel the need to have to go and learn every video from him. If you want, you can. He explains it much better than I do, and he has a lot more information on this, but I'm just going over the basics and what I believe the only things you really need to know. Okay, so range trading rules excuse me, is the, let's go to a different pair just to show you this happens on every single pair. It's not that this only happens on one. Okay, so here we can go on the 3-month. Actually, so 3-month candle on euro daily. Can just look over another example real quick. So if we have our 3 things we're looking for in ranges, a prominent low and a prominent high, preferably a low that breaks a high. Okay, so step 1, that's complete. Next step is the 50%. Next step is 50%. What's happening at the 50% level of this current range? Oh, we tap it, bounce off of it, hit it, bounce off, hit it, bounce off, hit it, bounce off. We're tapping the 50% over and over and over again. That shows interest on the sell side and interest on the buy side. This shows that the market makers are consolidating price to take one end of the range and distribute it back down. Okay? Last step, we want to say turtle soup from the 50% to take us to the range high. And we get that right here. Soup, right near the 50%. Expand very, very fast the range high. And this move usually is a quick move because the reason why they make it a fast move is because everybody who sees this massive pump above this high, they're buying this high. Okay, this is trapping so many buyers in. Everybody's getting in here, and they're gonna get dumped on, and everybody's in here. Now this gives the market makers liquidity and opposing, like, how do I explain this? Order pairing, right? If they're gonna need millions and millions of sell orders, they need millions and millions of buy orders, okay? And with this super, super quick volatile move above a high, when they're taught to buy the high and they see this kind of price action, everybody and their mother is buying this high. So this gives them the order pairing ability to then short it back down, okay? And we have the 50% turtle soup to take us up. So we have all three of our key components to a range. Now, obviously, there's time, there's key level. We're not going to get into that right now. But now we're going to go over the rules of range trading. Okay. Rule 1. Never buy range high. And never sell range low. Okay, that's rule number 1. Put this up here, you can write it down. Never buy the range high and never sell the range low. Okay, why? Well, because you're trading the exact opposite of what turtle soup is, which is selling highs and buying lows. This is how the market makers and smart money trade with highs and lows, because everybody outside of smart money trade using highs and lows as well, but they do it incorrectly. Okay, so never, it's a very, very simple rule. Just never buy the range high and never sell the range low, because you're trying to buy the breakout or the breakdown of a range, and it's not going to work. Okay, you're going to get burned so many more times, and you're not even trading it correctly. There's no point in even trying to do that. Number 2, don't participate inside the range. Okay, now obviously, as I was just talking about, there's a turtle soup at the 50% that you want to see, but that takes a lot of experience and time to be able to understand that this is the turtle soup to take us up to the range high. Okay, but that takes a lot of time and experience and intuition of the market to understand that. So until you have mastered ranges, until you have truly spent time studying and trading, forward testing, back testing, all of that on ranges, don't bother trying to trade this, and don't bother trading inside of this. Now, on the lower time frames, you can trade inside of this, but if you're trying to trade on the daily time frame inside this range, you're going to get burned millions and millions of times, right? Because you're going to think, look, we have a 50% turtle soup, but you get stopped out. Okay. You could think they were going to go to the range low. Look, we have a 50% turtle soup, and you're going to get stopped out. This takes a lot of time to understand how to trade inside the range. So until then, don't participate inside of it whatsoever. Do not participate inside of it. And third, see, for me, there is obviously ranges are a price aspect. Excuse me 1 second. Ranges are a price aspect, okay? It's simple. A range high and a range low. It's visible through the lens of price, but it's not visible through the lens of time, okay? So for me, there are so for me there is a sorry, my mom came in the room. Messed up my train of thought. We're all good though. Oh yeah, so there's a price aspect to ranges, okay? Range high and range low. But the timing aspect is not there. And as we know, time is obviously more important than price. And if you trade ranges based on the time aspect, aka as a candle, CRT, the fact that candles are ranges, specific candles are ranges, then that eliminates your confusion on which range high and which range low to take. Okay? Now, this isn't going to be 100% of the time. This isn't a 100% win rate strategy, but this is a very, very consistent way to look at price action. I'm going to get rid of this because I don't need it no more. Okay, so there's price ranges which correlate with a time range, and those are the ones that I'm going to be trading, right? Those are the ones where I expect when price comes up here, I can enter short and expect price to come all the way down to range low. The reason this low never got tapped is because of SMT with the dollar. So don't say it didn't work, because it did work. There was an SMT at the range low. Okay, so there's the time and paired with price ranges, which is CRT. And those are the ones that I'm going to be trading. Okay, CRT ranges. Price ranges, what the fuck? With the time element added to it, okay? If the time element wasn't here on this range, I would still be confident once this gets souped, we close below the candle that's stabbed above the high. I would still be confident we're down lower, but my rules say I'm not allowed to enter up here. I'm not allowed to get an entry up here because this isn't a time and price range. This is purely a price range, if that was the case. But this wasn't the case. This was a time and a price range. Okay, we can go over an example real quick of just a price range and why I would not execute here. So we can look at the weekly time frame. Okay, very, very key and prominent range. All right, we have a range low and we have a range high. What does the range high do? Range high breaks this low. Doesn't displace through it. This is what you would rather want to see it be displaced through. Didn't end up happening, but as you can see, prominent range high and a prominent range low. The 50% is being tapped. We're accumulating near the 50%. That shows respect and that shows building of interest on both sides. Okay, so that's two parts of price, or two rules to our ranges that have been confirmed. And third, we need a turtle soup that takes us down. Now we have this one right here. As you can see, very, very fast move. On the lower time frame, I think on the daily, we have another one. Perfect. We can look at this range on the daily. So right at the 50%, what do we have? Well, we have this daily range high. And what does this high do? This one specific high breaks this low. Okay? The high that broke the low. What do? We come above the high, turtle soup, and dump down to range low. Okay? So we have our three aspects of our ranges here. Now, why am I not allowed to take a trade down here according to my system and my rules? Well, you can look at the 3 month. Does this range measure within one candle? No, it doesn't. Okay, this is built up of 2 3-month candles. We can look at the 6 month. Okay, and the reason why is because we close below no 6 month key level. That's a hint for the key level video. No 6-month key level, and we close below the range. So based on the timing aspect, I'm not willing to take a trade and hold it to here. Now, did price do that? Yes, it did. But do I have the confidence that price will do that? Am I willing to have a large position down here with size and conviction to hold to this? No, not if all of my factors have been, what the fuck am I saying, bro? Not if everything has occurred for me to take a trade. Holy shit. Okay, so everything was there besides the timing aspect, right? And the reason why I'm not trusting this candle to hold, to be closed back within and expand, is if you pay attention to the power 3 of this 6-month candle. And there's also no key level to the left, okay, on this time frame. But that is an instance where we have just a pure price range, and you can still use that for bias. And if you want, you can trade that. That's personally just not something I do, okay? But you decide whatever you want to do. I'm just teaching how I trade, okay? Because if I'm trading with my model here, if you're pattern trading, you're going to see us come below this low. You're going to buy this. Oh, turtle soup. Boom. Right? You're going to see us come below this low. You're going to buy this. Boom. Turtle soup. You're going to get stopped out. Down here, you're going to be like, dang, this range maybe isn't working. You're not going to buy this low, and you're going to miss this whole expansion. See? Okay, so that's basically the way I look at ranges, the way I view ranges, the way I trade ranges. There's other aspects to ranges. Romeo and Vittorio teach this other aspect of ranges where if you break the range high, you can use the range high as a key level. I personally just don't like doing that because you're super high in a premium already. And it's just not something I personally trade with. Now, does it happen? Yes, it does. Just not something I personally will trade with. Okay, so go over the rules real quick. Very, very simple. Never buy range high. Never sell range low. What you want to see in your range is key high or a prominent high and a prominent low, the 50% being respected, and a turtle soup at the 50% to take us to one extremity of the range. Those are your 3 key components to ranges. And that's the way I trade ranges. And the last aspect is to pick a range that is a singular candle, aka a CRT. All right. Now we can go through a couple more examples just to show you real quick. Gold has a perfect example of a price range but not a time range. All right. We have a prominent high and we have a prominent low. What is happening to 50%? It's being respected. We have a turtle soup. I think on silver it's actually cleaner. Let me look at silver. Because there's a turtle soup on the lower time frame on the 4-hour, but silver, I can also show something else on silver that is perfect. So prominent high and a prominent low. Okay. There's a couple other things in the ranges that I can teach, but it's just too much information for you to digest right now. So these simple things I've already taught is more than enough than you need. You don't need anything more. So we have our 3 rules to ranges: prominent high and a prominent low, 50% being respected. Okay, we tap 50%, come down, tap 50%, come down, tap 50% right here, come down. This has verified this range for me. And what happens at the 50%? We have a turtle soup that takes us down to the range low. Okay, so we have our 3 aspects to ranges, but this specific range is no singular candle. It's not a weekly CRT. It's not a monthly CRT. It's not a 2-week CRT. It's not a 2-day CRT. It's nothing. Okay, so I'm not allowed to enter here and have conviction to take it to here. Okay, now I can use this and frame this range for a bias okay, for a bias that we're going to continue higher, but my rules say I'm not allowed to enter here to hold to here because this isn't a timed range. And for me personally, I only hold with conviction in trades long term, or if it's even like a long term trade like this, if it is a timed CRT range. Okay. And we can show another example of a timed CRT range that was perfect on silver. Okay, so we have a turtle soup, we have a weekly candle, and I want you to pay attention to this weekly candle. Don't just pay attention, another thing, don't just pay attention to the building of the range and the inside of the range. Pay attention to the leg that builds this range, the leg from the high to the low. What is consistent that you notice about a range that actually works and plays out, and which one that doesn't? And look at the leg that it builds. Okay, so if we're looking at this weekly CRT, why is this valid? Well, we can go over our 3 key rules for ranges: prominent high, prominent low. This high breaks this low, so even more conviction in this range. Okay, this high breaks this low, so I'm very confident in this high. Another thing, the 50% level. Tap 50%, reject, tap 50% again, and reject. So that's confirmed that aspect for me too. And lastly, a turtle soup to take us down. Right here. Soup, fast move down. Okay. Soup the range low, take it to the 50% and up to the range high. Now, from here to here, you have a bullish bias for the next 3 weeks. That's how you take advantage of these high time frame ranges and your knowledge of ranges, because it's all fractal, right? It doesn't just happen on the daily, it doesn't just happen on the 4 hour, it happens on the 5 minute, the 15 minute, the 1 hour, it happens on every single time frame that you trade. So you use this knowledge to have a high time frame bias, and now you can enter daily candles all the way up. Okay? And there's one rule I missed on ranges, and it is TP1 is the 50%. Always take profit at the 50%. And then TP2 is the range extremity. Okay. That's the other rule I missed, because there's going to be a lot of you who will trade ranges, it'll come to the 50%, and then it'll continue back down lower. And you're going to say, this range doesn't work, this strategy's bullshit, you're lying. No, because it traded to the 50%, which is valid, and that is where you should take partials at. Don't be greedy to hold to the entire thing, okay? Take partials at the 50% and expect price. And you'll notice things within price at the 50% if we're going to continue to the range high, or if we're going to reject 50% and continue away from your range and make the range invalid. Okay? You'll notice things over time, but always remember, take partials at the 50%. Okay? It's going to take a lot of experience to be able to have conviction to hold through the 50%, but for beginners and people who just now trading ranges, follow this right here, and don't follow away from it. Don't try to be the kind of person who's like, well, I don't need to take 50%, take profit. I'm going to hold to the whole range because I want to make more money and I want to get the cool screenshot to post on Twitter and post on whatever. And then you're just going to get fucked over and over and over again because you're being greedy and are not willing to be content with a 50% take profit. Okay, so follow that rule. Overall, that is basically all that you need to know about ranges. I hope you took notes on this, And if you stayed the whole way, I will break down a trade on silver, a forward tested trade on silver that I did not end up taking, but it'll be a sneak peek into the way I trade. Okay, so only for people who stay this long and actually watch the video all the way, you guys need to get this. So we have a weekly candle on silver. What is this weekly candle? We've already been over that. So this is a very, very valid range. What the fuck? Okay, and if we're trading weekly CRT, we need a key level that correlates with the weekly. Okay, it's another thing people never teach. They don't teach about key levels. I'll teach about it. I'll teach about what time frame key levels to look at, why that specific time frame. Okay, but for now, what do we have? A weekly FEG. Okay, what are we coming into within the dealing range? A deep OTE level, 0.705. Okay, we tap the high time frame key level. Now we can drop down to the 4 hour. 4 hour model number 1. Okay, but why does this not play out? Or why would I not wait for this? Well, this is where the butterfly model comes into play. Pretty sure. And for me, I don't need to. Actually, I'm not going over that. I don't want to go over that right now. Okay. We have a turtle soup of the range into a key level. Now, what you want to look for, if you want the higher ROR trade, is a low time frame range down here. Now, it doesn't occur on silver, but if you want to go ahead and look at gold, because they are correlating assets, they feed off of each other. All right. You can go look at this time and this price and tell me what happens on the 4 hour. You can go look for yourself, but it's very, very basic. Range high, range low, turtle soup, key level, take it to the 50% and up to the range high. Perfect trade. Okay. Now you can basically study what I just told you and you can kind of understand my model, but that's going to be the end of this video. This is a very, very long and dense video, and I hope you took notes, and I hope you learned a thing or two, and I give all credit to Romeo and Vittorio Rossi for teaching me these things. Now, I did teach you some things that they haven't taught, but most of it I learned from them, and then the things that I haven't taught is stuff that I learned on my own that I'm not going to teach just yet. But I hope you guys enjoyed. I hope you guys learned a thing or two. And next video, probably a couple trade reviews, and then from there we'll see what is next. But hope you guys have a good rest of your day, and I hope you enjoyed.